Hello, everyone. It's May and Danny from Engine Capital. We're here today to share a few market trends that we're seeing and some opportunities that we're identifying in our space.
And we've got a couple of examples of deals that we've settled recently. Attended the Equifax seminar, online seminar recently, and the main topic of the presentation there was how insolvencies seem to be tipping upwards quite dramatically compared to like any other time in the last 10 years, I think.
Including personal ones.
Yeah, okay. Um, What does that mean? Does that mean just everyone goes bankrupt, or is there, something happening? Is there like, are there insolvency specialists that have got some little tools and tricks that they're using?
Absolutely. In fact, Danny, one of our top referrers, as you know, is a restructuring specialist
Right, okay.
that helps people out of these situations.
Okay. And they're doing things like I hear a lot of the SBR flying around the world, small business restructuring.
Yeah, that's right. And interestingly, I mean, ASIC's published some stats like indicating that, almost 90% of the people that actually go through that, they actually come out on the other end, actually surviving.
Right, okay. So there's some refinances opportunities there as well, people looking for extra equity, for example, or trying to get some cash out of investment properties, which they can use to help in these SBR situations.
Absolutely. I mean,
Okay.
on our Core Plus product, as you know, it's unlimited cash out, and the speed at which we can actually get to settlement very much means that, if clients were in a situation where they needed a bit of equity release to get out of trouble, we'd certainly be able to support.
Must be a bit of relief for some of these small businesses.
So anybody that's been through a restructuring, there's only been 573 of them, 89% of them remain registered.
Wow.
So in other words, if you go through that process, not with the ATO, but with a small business restructuring, a lot of them actually end up surviving.
Wow, that's a great stat. So it means we're helping.
Oh, we're definitely helping. There's really
Um,
three key sectors, Danny. I mean, construction's very much right up there. I mean, of all of the external administrations in the
has been
last
for a
12
while.
months,
Yeah.
yeah, I mean, 27% of those are in construction.
Right.
And then that's sort of, I guess, closely followed by accommodation and food services. So that's 15%. I mean, it's funny, isn't it? You and I go and eat out quite a lot, and the restaurants are now quite empty.
Yeah. Melbourne Cup was a little bit quieter this year, wasn't it,
It
May?
was.
Yeah.
It was too. Okay. I mean, ATO debt seems to have become very topical of late in our space. Cash buffers from COVID are depleted. The cash rate remains stubbornly high, and business owners are now reluctantly using the ATO as a working capital lifeline. We're not shying away from deals because of that, as you know.
I hear that the ATO is a bigger creditor in Australia than we are.
Yeah, most likely. Restructuring appointments have also grown by over 200% in the 2024 year, actually, compared to 23. And it now represents 12.9% of all external administrations.
Wow, that's a big number.
We're seeing a huge amount of opportunity and lots of deals that are coming in where we've been able to support some of those customers with those problems.
So that brings me on talking about the products. I think we're seeing more. We're seeing more use out of the four products that we have. So the commercial core, the commercial core plus, the commercial dynamic, and the commercial constructor. It seems to be that the commercial core seems to be the number one product at the moment. There's more and more people that seem to be going through an application with a second tier lender, so a non-bank, and then for one reason or another, one of these nasty little surprises from the ATO is creeping up, or something that's making it a bit harder for them to actually get fully approved. So it seems to be that people are coming to us afterwards and then actually saying, "Hey, Danny, can you reassign this valuation from that we've already had done via Alex? It's already done. We just need to reassign it. Then you can have that." So it's been quite good because we can do that with the commercial core product. What trends are you seeing happening in the property market?
Well, I think we're finally, after a ramp up over a good 20 to 24 months, we're finally starting to see signs of some cooling off, especially in Melbourne and even Sydney. I mean, for the first time in some time, the Sydney auction clearance rates dipped below 70%. It was at 64.7% last week.
Yeah.
I think we're finally seeing some signs of the market potentially cooling down, but there are some wonderful opportunities.
I was going to say there's some winners and losers for that. Who's the winners?
Well, what we are seeing a huge amount of is applications from developments for pre-development stock.
Right, I've seen that coming through our deal flow a little bit. In fact, I did see one that we settled recently, which was a developer that was trying to acquire a house with
Yep,
some plans to smash it up in a couple of years' time, or once they've got the DA.
yep, in Cap City, and I think that might have been in Irvington you're talking about.
Yeah, that's the
Yep,
one. Yeah, I think we managed to get to 75% LVR on that one. Just valued it as a house, was a bit sneaky there, and they've still got a tenant in there. Gives them an opportunity to get a DA and then turn it into a
with a
development
little bit
second.
of holding income in the interim, and we could get comfortable with the sponsor.
Yeah. And what do you think then? If the auction clearance rates keep on going down like that, there'll be a few more opportunities for developers to come in and pick up some bargains.
Absolutely. In fact, I think we've already seen that start with the amount of volumes that we've been seeing in the last few months.
Yeah. Okay. So this is traditionally the busiest time of the year, May. I mean, I've done this for a decade now, and I've always seen lots of applications flying around at this time of the year.
There's no holidays during this time of the year.
So what are we doing with our rates? We're going to keep them low or put them up to try and take advantage of the Christmas rush.
We are trying to help our customers settle as many deals as they possibly can before the Christmas rush. So we've got a campaign at the moment. Let's test you on that.
Okay.
What are the key features?
Well, it's 8.95% starting rate.
That's it.
Maximum LVR is 75% on
Yep.
residential property.
Yep.
And we can use Valex valuations, not one-form valuations.
Yep. Take a pick on our panel.
Okay, good stuff. Well, hope we settle a lot of this stuff before we all head into our Christmas holidays, and we'll probably see you all next year. So, May, you said that the unemployment rate has remained steady, but it's still definitely up since the beginning of the year, right?
It's still at 4.1%.
Okay, what's the employment rate like at Engine Capital? Has that increased or decreased?
Since the beginning of the year, it's increased about fivefold.
Okay, so we've got a couple of new BDMs that have started with us.
Very, very eager.
Yeah, okay. Are they ready to take some calls?
Oh, more than ready.
Okay, so any deals that you have sitting on your desk that need that settlement before Christmas? Can't remember the number. What is it?
1300 766 074.